Yo my people, welcome back to the channel. Hope you guys are doing all well. In today's video I'm going to be going over how I made around 1.5k trading EURUSD. Now, if you guys have seen the last video, you guys would know that I passed a phase 2 account with Titan Capital Markets. Now if I'm being honest, this is my first time going with these lots, so I'm still testing them out essentially. Nevertheless, you guys can see the day I got the funded account I managed to catch one trade that put me into profit. Now all I have to do is literally get my minimum trading days out of the way and then I can trade the account. So without further ado, let's get right into this episode. Also, I just want to quickly say, make sure you guys go ahead and join the free Discord server. It's completely for free. We're now at around 2,400 members, but there's a lot of free sections which you guys can all benefit from. As you guys can see, there's a playlist full of free videos which you guys can watch to learn how to trade. There'll also be a link somewhere here on the video. And not only that, you get networks with people that are on the same mission as you. So of course, networks your net worth. Now if you guys do want to go ahead and get access to my full trading strategy, daily markups, resources, psychology, whatever it may be, so much content, make sure you guys go ahead and check out the link in the description. So without further ado, let's get right into this video. Now going into the London session, I've seen on the higher time frame that there are equal highs resting above. As you guys can see, sellers had their stop losses here, here, and here. Now if we just go to the hourly time frame, we can see that bullish PD arrays are being respected, aka this bullish fair value gap, and bearish PD arrays are getting ran through. So at this current moment in time, when I came into the day, I noticed how there was liquidity here and there was this order block and sort of imbalance area. I'll just mark out the whole area over here, you guys can see. And as you guys can see here, at this current moment in time, I sent an outlook for this point of interest here to every single one of my students, which they all could have used to essentially catch a trade. However, what ended up happening was during the London session, we never ended up tapping into this point of interest. So at this current moment in time, I just hopped off for the day. I say this to my students all the time: no manipulation, no participation. Now I ended up coming back during the New York session and I simply started off on the daily time frame. And I noticed how there was this daily fair value gap which price failed to tap into, and instead it made equal highs with. Even dropping down to the lower time frame, you guys can see there was a lot of liquidity generated at these highs over here. So at this current moment in time, I've simply just waited for more structure and price has now tapped into our point of interest. You guys can see it snipes into it. Now of course, dropping down to the lower time frame, what can I see? Price started to displace away towards the upside. However, I can't enter just yet. Why? I need to be a lot more accurate than just entering off of any random PD array. Price ended up giving a breaker structure, market shot shift above here, and simply even if we go to like the 4-hour time frame, you guys can see the 4-hour candle. What did it do? Tapped into this 4-hour imbalance. We know that price likes to tap into imbalances and trade away. Price is respecting it as well, so it's telling me that buyers are still in control of the market. Even after this huge sell-off down here, I'm still expecting the market to reverse back up. Now at this current moment in time, I'm looking to take an entry. However, if we just, let's just say, take this fair value up here, my stop loss is way too big, a 20 pip stop loss. And even if I was to go target this high over here, it's like a 1 to 2 risk reward ratio. For me personally, the risk reward ratio and the stop loss being this big is not part of my strategy. I don't like to have big stop losses, and that's why I like to go down to the M1 time frame and refine all of my entries. So at this current moment in time, I've just simply sat out and I've been patient and I waited for more structure to form. As you guys can see over here, what did price end up doing? Price ended up tapping into this order block down here, and if we just look at basic market structure, you guys can see I'm seeing that price is failing to go lower. And once again, even if we drop down to the lower time frame, we can see that price fails to go lower down here. So simply because of this, what have I done? I can see that there was this order block over here, and I simply just took an entry off here. I had my stop loss on the low, and I targeted this high over here for around the 1 to 4 risk reward ratio. In the market, there's something called propulsion. A propulsion is simply when we tap into an order block, create an order block. We tap into the order block, create an order block over here. You guys can see, tap into this order block down here, create an order block, and we're expecting the market to essentially just tap the order block, go. Tap the order block and go. Does that make sense? Of course, don't marry this idea. It doesn't always have to happen, and if anything, it just makes a lot of liquidity. However, it's a good confidence which you guys can use in order to know if the market's in your direction, if order flow is in your direction. And what did the market do? The market ended up tapping me into the trade. Now this trade here, I did not hesitate to go break even. As soon as we broke this high over here, I had moved my stop loss to break even. Why? Because I understand that price could always go lower, maybe tap this order block down here, sweep out these two relatively equal lows, and then potentially expand. However, due to my other confidences, I could still take this trade. However, because my bias wasn't too strong this day, I simply targeted this fair value gap up here. Why is that? Why didn't I go and target these equal highs? It's a clean draw on liquidity, and I could have got a nice, like 1 to 10, 1 to 11 risk reward ratio trade out of this. But why didn't I target the equal highs? And it's very simple. I understood that once price is in between two PD arrays, you guys can see we'd be inside of this 4-hour order block, and we'd also be inside of this 1-hour fair value gap up here. What could the market start doing? The market could start accumulating, and in that case, I don't want to be in there. And another thing as well, notice how this fair value gap is perfectly in line with equilibrium, this 0.5. So once the market rebalances towards this fair value gap, rebalances equilibrium with the range, I didn't have too much conviction that the market was going to go draw higher. And another thing as well, there was no news this day, and my TP, if I was to go extend it, would be a 46 pip TP. I don't know about you guys, but when there's no news in the market, I'm not really trying to take that risk. Another thing I want you guys to notice as well, notice how the market has generated all of this liquidity up here, all of these sort of relatively equal highs on this area here. Sellers will be looking at this as a level of resistance. Traders that trade like chart patterns like double tops, I don't even know, head and shoulders, knees and toes, they would all be selling in this area, making this area a good pool of liquidity for the market to go and take. And notice what the market does. The market ends up retracing, mitigating this order block down here, and as soon as it mitigates this order block, what I done was I trailed my stop loss down to this low, which was a bit of a, I wouldn't say silly mistake, but I didn't really have to do it if I'm being honest. My break even was still, I begged it essentially. Now what the market ended up doing was on one of my 200k accounts, this ended up tapping me out. You see where the market came back down here, spreads opened up, and this took me out of the trade. However, on the live 25k funded account which I had, this was somehow still in the trade, and as soon as price rallied up here, I thought I was good. And notice one more thing. You guys can see we've broken structure. However, what did we do? We tapped into this order block over here. Now watch what the market's just about to do. When I saw this and I understood this, it helped my psychology stay like essentially a lot more intact. I wasn't really panicking about the trade. I was essentially a bit annoyed because of how long it took to hit TP. Of course, naturally as humans, we do get sort of impatient. However, I understood that there was going to be some sort of delay in price to go and hit my TP. Does that make sense? Now, first thing I want you guys to understand is notice how price taps into this order block, generates more liquidity and retraces lower. Now, at this current moment in time, people would go and throw their stop losses down to this low. Why is this a mistake? They would look at this as, yeah, we've rebalanced the range, we've mitigated this fair value gap, the order block, wherever it may be. We have no reason to come back down to this low, so let me trim my stop loss to this low, secure some profits, play the safe game. Price is respecting the fair value gap. It has to go higher. It has to go now, hit my TP. Incorrect. If we simply play around with our time frames, you guys can see what is there. There is this unmitigated order block, and what does it have? It has liquidity. And if we play price action on, you guys can see the market is accumulating. It's still generating a lot of liquidity at the highs. You guys can see sort of trendline traders will be entering the market wherever it may be. The market ends up making equal highs and equal lows. So now double top traders, double bottom, whatever you want to call them. And you guys can see that the market ends up taking out these low, mitigating the order block, giving a fake reaction to getting early buyers, retracing back into the order block one more time, sweeping liquidity one more time, mitigating the order block slightly more, and then the next candle opened and price flew and hit my TP. And this is where market experience, intuition, and just overall having a good trading strategy comes into clutch. If I get out of replay mode, you guys can see what happens in the market. The market ended up sniping into the most discounted POY and then buying off. Now, I'll be honest, at this point, I did hop off the charts. Otherwise, I probably would have traded and caught the buys. But the main lesson I want you guys to take away from this trade here is simply to understand that if this day I was to be greedy and go and try swing my TP and try playing Superman, not close any partials or done anything, I would have been a very angry man. However, I played my card safe. I understood that today there's no news. I took what the market gave me. Does that make sense? Like I said to you guys in the last video, you guys got to know when's the time to be greedy. Not greedy, but when's the time to extend that TP and when to hold that trade with full conviction. But when you're aware of your emotions, then of course you can enter the market, catch these quick little scalps that end up helping you securing some payouts, getting your funded account out of drawdowns. Does that make sense? And as you guys can see, the same exact point of interest ended up holding out. Yeah, I sent this to my students in the daily markups. Like I said, if you guys want access to that, access to the ebooks, multiple weekly charting sessions, etc., make sure you guys go check out the link in the bio. A lot of traders these days have been calling me out and saying I make money off affiliates, I make money through selling my course, my mentorship, and I don't make money through trading. Now, if anyone has to say that about me, join the free Discord server, watch this video here, because I've shown you guys full transparency in that video of how much I've made off the course and essentially trading off one account. And nevertheless, all of my wins, all of my losses are all posted here, so you guys can see for yourself. Is this guy really a consistent trader, or is this guy one of them fake traders that only posts his wins like these other traders out there? You guys can see I'll post all my losses. I'll go on a losing streak. I'll show you guys. I've shown you guys full transparency, and you can scroll on this for so long. You can keep scrolling. Once again, make sure you guys go join the Discord. I've given away so many funded accounts in here. It's not a joke. And one of you guys might be lucky enough to get free access to Project 30. So without further ado, I hope you guys have learned something new. If you guys have got this far in the video, leave something in the comments. Just something. Just say the word Mike. Green, pink, green, I don't know. That way it just helps boost out this video on the algorithm to other traders out there. Personally helps me grow as a content creator. It literally just takes like 2.3 seconds to go show some support. With that being said, it's been your boy on effects. Take care, my people.